Hi everybody, this is Gary dealing with Sentiment Timing, and this is a special free video report for Friday, February 5th, 2016. So let's get right to it. At Sentiment Timing, we believe that human beings in the markets are irrational, and there's always going to be an irrational element at work, and that is what creates market opportunities. Now, we find these opportunities through Woody Dorsey's proprietary sentiment database, as well as his technical timing indicators, which predict when the indexes are going to reverse well in advance. And then from there, we look at technical divergences as well as support and resistance zone to try to pinpoint exactly where these turns can take place. Now, they're not going to be 100% correct, but you know what? You're going to know if it's safe or not to be buying or selling. So if a particular technical turn date does not work exactly on the date, it may pass. But if we have sentiment levels that are at extremes and we have divergences, you're going to know that it's still not safe, even though it didn't turn on that particular date, to be following the trend. And that's something that just recently happened. And you know, again, you need to know when these markets are going to reverse, and through that, it really does help control your emotions, and your emotions are what's going to lead you to make wrong trading decisions 99% of the time. Now, sentiment is emotions, and how traders feel about the current trend is really, really important, because it's the missing link. It's almost like playing Texas Hold'em and being able to look at your competitors' cards. It makes things a lot easier. And then again, price just lets us know exactly where to be looking. So on Tuesday, I had said that we were looking for weakness, and then into a particular date, and I had this X'd out on it, and we have strength that is due into X'd out. So I'm going to go to a report right now, and this is on January 19th. So again, we're now going into February 5th right now. So almost 2 weeks ago, 2.5 weeks ago, you would have known by reading the report that there was declines that have always been due into the February 5th. That's today. Now, does that mean you need to go out and buy? No, because these things change, and we have another date that is also in place. So, but my point is, you would have known, going all the way into January, January 19th, no matter what was taking place, these declines were set to come into this time period. So when you got bounces in the market, like we got here on February 1st, this was this was a shocker. This was not anticipated. But again, was it? Should you have jumped on the bandwagon and started buying? Absolutely not, because we had bearish divergences in place. If I go to a 60-minute chart, we ran right into the 50% retracement level. So now we also could be making a head and shoulders pattern. And if this is in play, we're looking for a move to come all the way down here. And the way that I have this labeled is that this was our wave A. Now we're making our wave B, and this wave B is going to trap a lot of traders. Now, what do I mean by that? They're all going to get bearish on this market, and it's going to be right when we are anticipating the next turn. And what happens? It's the same thing that goes over and over again. Everybody gets bullish on the markets here, they get bearish on the markets here, and it's just about when everything is going to reverse. So knowing when to anticipate these turns, and also able to to be able to see what is going on as far as with divergences, support, resistance, and then looking at what sentiment is doing, it gives you an actual advantage that not a lot of people have, and that's really the key to trading these markets. Is one, knowing when to anticipate the moves are going, when it's going to reverse. And like I was showing you, this is going all the way back to January 19th. you knew that the market was supposed to be under pressure and going into the fifth. So we were expecting bounces back then. We got it. But the overall trend was going to be down into this area. And again, I say area because there's another date. So you don't want to be actually jumping on and buying. But the point is, you would have known, was it safe to be buying this rally here? No. Was it safe to be buying this rally here? No. Is it safe to be buying this decline? It's going to be. And there's going to be a very, very big rally that is pending off of this. And when it happens, most of the people that are going to be perma bears on this are going to be shorting the whole way up. And before they realize what is going on, they're going to get squeezed. And anybody who's anticipating this turn, they know the date when it's supposed to be coming. They're going to be, already have our areas to watch for, and if these lows are taken out here, this is the first area that the bears have to push through. But if they do, you just want to keep an eye on the 63 and the 40 area on the S&P, because everybody's going to get bearish and everybody's going to be waiting for these lows to get taken out, and unfortunately that's not in the cards. And if you know this and you anticipate this ahead of time, you're going to know that when we get this panic drop, if it comes, I mean, this is, the move happened and we're on a day that it could reverse, but technical wise, it's not really lining up. So I would anticipate a bounce and then back down again. But do you really want to press the short side? Because we're in the technical turn date, and it could extend into next week, which it very well could. But again, we're here right now. So if we get this bounce and it continues higher, don't fade it. Don't believe that we have to head lower. This head and shoulders pattern I'm showing you, you're going to start seeing this popping up everywhere, and that's why I think we will take out these lows just to trap traders, where everyone's going to be shorting just so we can get that wave C up. And like I've been telling a lot of people, I would not be surprised to see it trading all the way up at the 1992 area. And I really wouldn't even be surprised if it traded all the way up at the 2040. So right now, like I said, if you knew when these turns are coming, you would have been able to position your trades. It's something that we do. This thing has been, working like a charm. The technical turn dates, as far as when to expect the turns, matching that up with what sentiment is doing, how are traders feeling about the market, and from there, then using your regular technical analysis and knowing where these reversals should be. Are there bearish divergences? Are there bullish divergences? And what to be doing with these patterns. So if we head lower, be a buyer when we start coming to these support levels. If we rally, I wouldn't get too aggressive on the short side, because today is a technical turn date. So with that, enjoy your weekend. And again, anticipating what is going to be happening, knowing it in advance, is what controls your emotions. And when you make emotional trades, you're going to be wrong 99% of the time. So with that, enjoy the rest of your day, and I'll talk to you guys on Tuesday.